Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through some live mortgage rates, and then we're going to do a deep dive into short-term rental property loans, something we love here at the Mortgage Calculator. Give us just a second here to go live on all the different platforms. We do appreciate everybody tuning in nice and early. I see some comments already coming in there. Feel free to drop a comment there in the chat as we get started here. So it looks like we're live on all the different platforms. We'll go ahead and get it started here. Go ahead and we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can drop any questions you have in the chat as well after we go through our deep dive topic here for today. We'd be more than happy to answer any questions there in the chat. But let's go ahead and get it started. All right. So welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates for a few different programs. And then we do a deep dive into a different loan type. And today's loan type is going to be short-term rental property loans. Now, because we specialize in non-QM loans and we work with a lot of investors here at the Mortgage Calculator, this is something we're very familiar with. So Jose will take us into a deep dive into short-term rental property loans here shortly. But before we do that, we'll do what we do every morning, which is pull up the live rates. So Nick, if you're ready, let's go ahead and see what the rates are looking like this morning.
All right, looking pretty good here. Let me refresh my tab again. It's always good to double check here. What we will do is pull up the live rates. We have all of the first rate sheets for today. It is July 15th, just after 11 a.m. So we'll see all of the new rates for today and compare the APRs across the program. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. So that we can compare a standard scenario across all the programs, we'll set up a standard single-family home, $500,000 purchase price, $400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. We'll set everything to a 760 credit score and an estimated 40% debt to income ratio. So that will be the settings. Let me go ahead and share my screen and check out the rates for today. So pretty cool. We saw a pretty big jump here in conventional, which is the first option, 30-year fixed conventional primary home option, which is typically the first option most borrowers think of when they're thinking of a mortgage. Rates today come in at 6.25, final APR 6.581. Remember, just a few weeks ago, we were up over 7 on the APR, so pretty amazing drops here in the last few months and weeks. Now, if our customer doesn't qualify for a conventional option, typically the next option we want to present is an FHA option. FHA allows more leniency on credit issues as well as a higher debt to income ratio, but it does require upfront and yearly mortgage insurance. FHA comes in today at 5.5 rate, final APR 6.477 with all of the fees included. So if our customer qualifies for both, FHA could be a touch cheaper here in this example, but does require that yearly mortgage insurance. And our customers that need to use FHA, definitely very cool, as it is very comparable to conventional to use these FHA options. Moving on to our VA options. Remember, VA is only for our eligible active service members and veterans. If you are eligible, these programs are amazing. Rates today, 5.75, final APR, 6.043. Hopefully we see it drop under 6 here shortly. Now, as you can see, the APR for a VA program is better than FHA or conventional. So anybody that is eligible, definitely take advantage of the VA programs and your eligibility. And moving on to our final agency government option is USDA. USDA is only for properties in a USDA eligible area. It's typically the rural areas of the country. If the property is eligible and the borrower is eligible, these are great options. Rates today come in at 5.625 and the final APR with all of the fees included, 6.383. So notice if our customers shopping in these areas and comparing to a FHA option, it is a touch cheaper and touch cheaper than conventional as well. So definitely a good option for borrowers looking in those areas. Now, these 4 standard agency government options are the options any other bank or lender will have. Unfortunately, if the customer doesn't qualify for a standard option, many other banks or lenders have to deny them. But that's where we love to present our 5,000 non-QM options, including our standard 30-year fixed non-QM alt doc for a primary. So if our borrower can't qualify for a conventional option, needs to use alternative docs, we have our non-QM alt-doc option for a primary home coming in at 6.75 rate today. Final APR 7.062. And as you notice, as conventional drops, now we've seen a large drop in the alt-doc as well. We're always within about a half a point of conventional when we're using alternative docs. So since we've seen a substantial drop here on conventional, we're also seeing a substantial drop in non-QM finally. So that's pretty awesome. Final APR 7.062, again, within a half a point there of conventional. Now, moving on to our investment properties. Our investors have a lot of flexibility. First up here, our non-QM alt doc, so bank statement or similar option, comes in today at 7.25 for an investment property. Final APR 7.589. And we'll compare that to our other investor options. First up is the conventional option. Remember, there are no government options, so no USDA, VA, or FHA for an investment property, but we do have our standard conventional option coming in today at 7.125 rate. Final APR 7.482, which is a touch cheaper than the alt doc today, just by a touch. Those flip-flop a little bit, but always recommend our investors check out our favorite programs and absolutely smoke in today with our DSCR rates. DSCR stands for debt service coverage ratio. No income, no employment needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. The estimated rents can cover the expenses, aka the property cash flows. That's a ratio of 1 or higher, which is preferred. For all the demos, I put a ratio of 1.5 so we can see all the programs that we have. First up is our 3-year prepayment penalty option, which is pretty standard. Rates come in today, an amazing 6.75 rate. Final APR 7.085. Absolutely smoking conventional, alt doc, everything. And our DSCR with a 5-year prepay, absolutely amazing, 6.5 rate. Final APR 6.815 with all the fees. Again, absolutely destroying all the other options. Amazing. And our final DSCR option, some states don't allow a prepayment penalty and some investors don't want one. That's no problem. We do have options with no prepay. Rates come in at 7.375, final APR 7.715. So it's a touch higher than conventional. Most of our investors still prefer DSCR, and we always recommend to add that prepayment penalty, which makes the rates absolutely smoking today. And our final options here are non-QM second mortgage options. So a lot of people in the market today, both investors and homeowners, have a lot of equity and need to get cash out, but have a very low rate first mortgage that they may have gotten in the last few years when rates were much lower. The solution for that is often a HELOC, but the better solution that we have here for most borrowers is our second mortgages that are fixed. So these are non-QM second mortgages. We can use bank statement options and similar. And for a primary home, we can get cash out for as little as 8.125 rate, final APR 8.278, and don't have to touch that first mortgage or do a HELOC with an adjustable rate. And same thing for our investors out there. So you can get cash out of an investment property. HELOCs are very rare for an investment property anyway, and we can use bank statements and similar. So amazing options here. Rates as low as 9.875, final APR 10.124 to get cash out of an investment property. So those are some amazing options. Now let's pull up our topic for today, where Jose gets into one of our favorite options and coolest ways to use our programs here, which is for short-term rental properties. So that's probably the number one request at our company, most popular, I guess, loan type that we offer, and most popular talking point for most of our investors out there that are looking for rental properties, and more often than not looking for short-term rental properties. So we have all kinds of solutions for these options, and they change every day as more of our programs allow more leniency on short-term rental. So I'm sure Jose has all kinds of different options. Can't do those in the live pricer. So fortunately, Jose will break them all down for you today. So what do we got here, Jose?
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. Definitely at the Mortgage Calculator, we assist many investors with their DSCR purchases, especially purchases of short-term rental properties. And that's where the non-QM guidelines, specifically those for DSCR, allow us to shine, because there's so many different guidelines. We've scoured them all, and we've identified those that are short-term rental friendly. So let me share the first one with you that I have here for our DSCR purchase. First one we have is with 15% down. Now, this is used to be the unicorn, but now we have many more options with 15% down. The beauty of it is that due to the DSCR flexible guidelines, if the long-term rent works, we can use just long-term rent. No need to break down any short-term rental, AirDNA, short-term rental revenue reports, or the like. Simply, if the long-term rent works, we can use long-term rent for your short-term rental property with only 15% down. 7.75 is our lowest cost option at 1.4 points, and we can buy that down all the way to 6.999 at a cost of 3.025 points. And again, if the long-term rent works, we can use the long-term rent with our 20% down option. Now, the reason I'm stating if the long-term rent works, because when we do use short-term rental specifically, there will be additional restrictions. The minimum DSCR required may increase depending on the option selected. And I'll bring that up on the ones that I will be sharing with you using actual short-term rental income. In this case here, we're assuming that the long-term rent works. So we're looking at 20% down option. 7.125 is at par, amazing rate. And you can buy that down all the way to 6.375 at a cost of 2.65 points. So now when we are using AirDNA, right? AirDNA is a database that provides comparable rentals of short-term rental properties. Now you do have to worry about the same parameters that you have to worry about regular non-short-term rental comps, like proximity, similar style as the subject, similar gross living area as the subject, but especially proximity. You can't have comps 10 miles away. In this case here, when we are using AirDNA, the minimum DSCR is 1.5. Now, if it is a good short-term rental property, you should not have any issue meeting that 1.5 DSCR, but that would be the reason why you would hopefully try to get it approved with long-term rents rather than AirDNA, if possible, on your purchase. 7.125 again is our power rate, lowest cost option, and you can buy that down to 6.375 at a cost of 2.615. No loan level price adjustments either when using short-term rent, but the what they do, again, like I mentioned, is hit you with is the requirement of having at least a 1.5 debt service coverage ratio. And now this is our option using revenue reports, right? So if there are no AirDNA comps that are suitable, but the property seller is currently using the property as a short-term rental and they can provide their revenue reports, then this would be the great option. And we're looking again 7.125 is our lowest cost option at par, and you can buy that down to 6.375 at a cost of 2.65 points. And now when the seller is not doing short-term rental of the property, so there are no revenue reports, when the AirDNA doesn't provide suitable comps, there is the option to use long-term rent and then just drop the go to, should I say, to the next tier below, which is the low ratio DSCR, which is a 0.75 to 0.99. So 25% down on this option. And this is great for those properties that the investor, the borrower knows that they're going to hit a home run with it. Great property. They know how to operate it. There's just, for whatever reason, no suitable comps or no short-term rental revenue reports. So 7.825 is our lowest cost option at par. And you can buy that down to 6.49 for your low ratio 0.75 to 0.99 DSCR purchase with only 25% down. And then if you can't meet the 0.75 to 0.99 debt service coverage ratio, we do have one. This is a mind blower, or this is our no ratio DSCR, where the debt service coverage ratio is less than 0.75. Again, only 25% down payment for this option. And we're looking at 8.624 is our lowest cost option at par. And you can buy that down all the way to 7.124 at a cost of 3.275 points. And our last option here, I just want to share our DSCR cash out using short-term rental revenue reports. Amazing rate again, 75% LTV, no loan level price adjustments on this one, but you do need that 1.5 DSCR. 7.125 is our lowest cost option at par. And you can buy that down to 6.375 at a cost of 2.65 points. So please do look to the mortgage calculator for all your short-term rental property needs, DSCR loans, non-QM, and agency.
All right. Thank you, Jose. I don't actually see any questions coming in here, but definitely amazing programs there. And as like Nick said, very popular with the real estate investors out there right now. So definitely something to consider there. Still no questions coming in, so we'll go ahead and wrap it up. Remember, we do this at 11 a.m. Eastern every weekday where we go through our live mortgage rates and then we do a deep dive into a different loan type. So we will be back tomorrow with a new loan type to go through. We appreciate everybody tuning in. We'll see you